Hello everybody out there in television land, and welcome to Realtor Talk. I'm Gary Seymour with ERA, the brokerage real estate company, and current president of your local real estate association, the Greater Pocatello Association of Realtors. Today we're going to be talking with PNHS and Bank of Idaho about funding, about programs, the way you can get into your first home, your second home, to buy a home in this market. So I'm going to introduce my colleagues. On my left is Larry Bell. He's with Bank of Idaho. He's the Vice President of Bank of Idaho, a real estate guru, and honestly, he was doing loans when he was first in diapers, and he'll probably end his career doing loans in diapers, if you know what I mean. And then we have Mary Boyd. She's with Pocatello Neighborhood Housing Services, and she has a lot of loan programs out there. We have some infill homes that are available, so it's a great opportunity for buyers to buy. So I'm going to start with Mary, and Mary, kind of give us an idea of what Pocatello Neighborhood Housing Services is all about.
Well, we're pretty diverse. We build infill homes within our 5 neighborhoods in Pocatello. And usually we take blighted lots or lots that are just sitting empty and put in new homes. We do foreclosure counseling. We have a down payment closing cost assistance program. We do credit counseling. We are doing rehabs. We're buying up foreclosed homes, and we're doing rehabs with rehab stabilization money. We really have a lot of irons in the fire.
Yeah, absolutely. Now, Larry, how do you coincide? What's your situation and your relationship with PNHS?
We work real close with PNHS, and we have for a long time. A lot of times we'll have people that want to buy a house and they may not have a down payment, and then we can work with PNHS and they can provide them with down payment money. Then we can provide the long-term loan. And when we work together with PNHS, we can do a lot of the paperwork. We can forward it to PNHS, try to streamline the process.
Mm-hmm. Now, interest rates today for a real estate loan on a program like this, what would a buyer normally see as an interest rate? Do you have an idea?
Today would be at 5%, and that rate has been pretty stable. So if somebody's looking, I think they can safely count on rates being around 5%.
And that's a 30-year loan?
30-year fixed rate.
Okay. Okay, if they want to do something less, I mean, there's some 15-year loans. Is that usually about 0.5% less? So,
yes.
Okay.
Yeah.
So around 4.5% to 5% of the interest rates.
Yeah.
Incredible interest rates.
Right.
You know, this market right now, with the amount of properties available, certainly PNHS offers those infill homes, and you'll drive neighborhoods and you'll see those homes, and you'll say, well, that's a brand new home in an older area or an existing neighborhood. That really kind of makes it look a lot, you know, brings up the values because you got new homes, and those are stick-built on-site homes. Those are not brought in, and I just think that what you guys do is incredible, and the fact that you're looking for building lots. That's I have people that have an extra lot maybe next to their house, and they're going, you know what, we don't irrigate it any longer. We're not putting the garden on it. We'd want to sell it. So they could get a hold of you, and you have a formula to establish the value in those lots.
Usually the city and Pocatello Neighborhood Housing work together in purchasing those properties. Okay. So they could either get a hold of the city or they could get a hold of our office, and then we could coordinate that.
Okay. And then, like I said, there is a formula. I remember that, I forgot, I was talking to Mark Dahlquist, I think, and they gave me a per square foot kind of the lot.
Yeah, I don't know that, though.
You really don't? Okay. Well, I'm not sure either, but it seemed like it wasn't a bad price. It wasn't like a low ball offer like you see so often.
Exactly.
It was a market value based on what they've been able to purchase lots for in the past. So again, it's not, if you needed to maybe free up some cash or don't need that extra lot, it's a great opportunity to build the neighborhood up, increase your values, because now you've got a brand new house right next door to you, and you're working with PNHS, which is a great program. So that's fantastic. You see your programs on the Pocatello Neighborhood Housing. I struggle a little bit with how to, what buyer would come to you, and we were talking before we got on the air, and it was your benefit of going through you rather than just going and getting a loan if they don't have the down payment and closing costs.
Right.
You kind of explain how that deferred loan is, it's not a grant, but it's a...
Well, on a regular down payment closing cost assistance, that is a loan. It's at 6%, it's for 15 years. And we work hand in hand with the different lenders. We are FHA approved, HUD approved, so that we can help them get their down payment closing costs. And the lenders usually will call us, and then they share the information with us. Sometimes the buyers, I never even meet the buyers. They can come into my office and talk to me, and then I will give them a list of lenders that we're familiar with, and then we work hand in hand that way. The infield houses are different. There is money there that is zero interest, and they're not grants. They're a loan. It's a lien against the property, but they don't have to be paid back till that house is sold or if they refinance.
Okay.
At that time, then it gets paid back, but otherwise they could live there the rest of their lives, and that would just be sitting there. What it does is it allows people to get into brand new homes for about $700 a month.
Right, and so instead of having to pay that, they don't want to pay. They're paying $700 a month in rent right now.
Exactly.
And they're saying, gosh, I went to my loan officer and it looks like I'm going to have to pay about $900 to $1,000 a month, and I really don't have that additional money available, even though there might be some tax advantages with owning a property, writing off your interest in property taxes on your tax return. It still doesn't offer you that $300 a month can really hurt you. But you're saying now you get to have that same home, or even a home nicer than what you were looking at, for the same money. So
now I want to make that real clear, though. That's just on our infill houses.
Okay, right.
There is some money that goes with the foreclosed houses that we're renovating. Again, it's another program. We get money from different sources, so we have to use it in different ways.
But again, a phone call to you can answer a lot of questions.
Absolutely.
And that's what I think I'm really trying to achieve by...
Absolutely. It's call us or make an appointment, come in, we can sit and talk.
Yeah, I think that to me. Don't think I can't qualify. I don't think there's a bad question. I don't think there's a I think it's always, let's get the questions answered. In this part of the country, we were talking before again, and my sister just purchased a home in California, and entry-level home there is $300,000. And so people are just priced out of the market. And I'm talking, even though the market's down in California, still that's an entry-level home. So here, where there's 100 homes under $100,000 and 200 plus homes over between $100,000 and $200,000, those are existing. Not to mention what you may have available. It's incredible that if you have a stable job and you feel good about the community, you should be owning a home today. And it really isn't it. And then the $8,000 stimulus money.
Exactly.
I mean that's another. That doesn't have anything to do with. That's just an $8,000 they get back after they close on a loan if they've been a first-time home buyer.
Mary, on a regular down payment and closing loan, what would a typical monthly payment be?
We've been averaging about $3,000 to $4,000 for the down payment closing costs, and the monthly payment has been about $35.
So it's really affordable if you do that. It's
affordable.
not going to add a lot to your monthly payment.
No, it's not.
Yeah.
Yeah, and again, to me, so you really don't have to have a lot of cash if you've got a stable job and you've got a decent FICO score.
Exactly.
You can get a house without a lot of money, and that's the problem with most of those first-time home buyers. They've achieved a good position in their job, or they feel comfortable with their employment, but they haven't been able to save any money. And these programs, $35 or $40 a month to get that money to go in, or if it's an infill house and it's a grant, not a grant, but a no-interest loan, again, you don't have to pay that back to yourself. I mean, these are opportunities to get in with absolutely no money out of your pocket.
We do have a requirement that they have to come in with either $1,000 or 1% of the sales price.
Okay.
Depending on which is the lower of the two. And it would cost you more than that if you got into an apartment.
Right.
So we don't feel like that's unreasonable.
Deposit, right, exactly. Right. No, I think that's really true. That 8,000 stimulus, I was just talking to a couple colleagues that are going back to Washington, D.C. In fact, they're there right now trying to talk with Congress, because we originally, the Association of Realtors actually started the program for the stimulus, the $8,000. It was a $15,000 stimulus package we put together for every American that buys a home in this country, and it went to Congress, and they changed it to $8,000, and you had to be a first-time home buyer. So we weren't really happy with that, and so we went back and we said, you know what, this has been no question, it's stimulated our market. I can tell you with statistics that entry-level home or price range is where the money is right now, is where the sales are, is where the activity is, and so